Good morning, everyone. Welcome to Prepare with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. I'm part of MarketSmith India team, which manages overall portfolio. Before we go ahead into the podcast, I would like to state the disclaimer. Registration granted by SEBI, membership of BASL, and certification from NISF in no way guarantee performance of the intermediary or provide any assurance of investors to returns to investors. Investments in securities markets are subject to market risk. Read all the related documents carefully before investing. Let's start with the Nifty's daily chart to understand the market current structure. And also, it's very important to understand the Nifty's price volume action as well. Most of you might have a doubt that what is Nifty's volume. It is nothing but Nifty is not a traded instrument. Only Nifty futures is traded. But Nifty 50 as an index volume comes from the constituents. Summation of all the constituents volume is the Nifty's volume, which we track, which is highlighted here in the bottom section. Talking about price volume action, here you can see Nifty has been in a very good trajectory after making a low of 16,800. It has been in the upward trajectory. It has moved more than 1,000 points, nearly 1,400, 1,500 points. It has advanced. But in between, there have been few hiccups, like selling happening on the higher volumes. This is majorly because of Nifty IT index, which reported not so good results. And again, the last week also, we have seen a couple of sessions on downfall. And talking about if you track key moving averages, Nifty has been trading above its moving averages. 21 DMA is a green line, which Nifty has tested a couple of times in the last 4 to 5 trading sessions. And in both the sessions, Nifty found a good support at its 21 DMA, which is a very positive sign. If the 21 DMA is breached, then the next support is at its 200 DMA, which is a black line. And from there, there are a couple of more supports for the Nifty on the downside. On the upside, if you are looking at 18,400 has been acting as a resistance, and Nifty has traded around that area for a couple of sessions, but it has not been able to find the required momentum to take the Nifty forward and make a new all-time high. 18,887 was the all-time high, and another 400, 500 points if the Nifty advances. That is less than 3%. Then we might see a new all-time high on the Nifty index. Talking about O'Neill's perspective, we have been in the rally attempt since long back. We have been waiting for a follow-through session on the index. Follow-through session signifies a fresh momentum coming into the markets, and the breakouts happening on that particular day will be more successful when compared to status where currently we are in, that is rally attempt. Some of the stocks are breaking out from the base patterns at the current moment, but there is no strength in those breakouts. A couple of them, some of them are failing their breakouts. The probability of breakouts being successful will be higher in the confirmed uptrend. However, we have been adding stocks to model portfolio. We don't want to miss out the rally. Nifty moved 1,400 points, which is not a small advancement. So we have been in the market, and we have added a few stocks to model portfolio, and which are doing well also. But once the market is in confirmed uptrend, we'll be adding more stocks to our portfolio, and the probability of those breakouts will also be on the higher side. As the earnings season is going on, most of the stocks have reported already. Large cap stocks have reported, and some of the small cap and micro cap companies have been reporting their results. So we are almost at the fag end of the results season. Some of the companies which have reported their numbers yesterday over after market hours are Balmer reported their numbers. March quarter revenue has increased 5% year-on-year basis to 600 crores. EBITDA margin has contracted 260 bps to 8.6%. Profit was also down 5% to 44 crores of rupees. So this stock might come under pressure in the today's trading session. Aster DM Healthcare Services has come up with their numbers. Revenue increased almost 20% year-on-year basis to 3,200 crores of rupees. Whereas if you see on the margins front, the company got hit. Margins got contracted 150 bps to 15.5%. Profit was also down nearly 25% to 170 crores of rupees. Again, not so good results for the Aster company as well. Mrs. Bectors Foods has come up with their numbers. Revenue increased 37% to 346 crores. And the margins have also improved very good, almost 400 bps to 13.9%. Profit surged more than 176% to 27 crores. Another company, that is Eclerx Services, also come up with their results. Revenue increased 17% to 690 crores. Margin saw very good improvement in terms of EBITDA margin getting expanded almost 900 bps to 29.8%, which is a very high margin. Profit was up almost 12% to 132 crores of rupees. In yesterday's trading session, FIS have bought more than 589 crores of Indian equities. This is on net basis, net buying minus net selling. Domestic institutional investors have also given good support for the market. They have bought 340 crores of Indian equities. In the today's trading session or during trading hours or after hours, some of the companies which will be reporting their numbers are Sun Pharma, Grasim, BHL, PEML, Capacite Infra Projects, Chambal Fertilizers, Ion Exchange, and Inox Wind. These are some of the companies. Along with these, there are other companies also which will be reporting their numbers. So whatever stocks which we have discussed now, if you have any of these stocks in your portfolio, personal portfolio or any family portfolio, please be watchful. We might see some volatile action happening on the either side. So please be watchful of your positions. If there is any sharp selling and if you any of these stocks breaches their key moving averages, be sure to remove them from your portfolio. Overnight, the US market closed pretty much higher, except Dow Jones, which closed 0.1% lower. Other two major indices, S&P closing 0.9% higher, Nasdaq Composite closing 1.7% higher. Talking about Asian markets, Shanghai is trading 0.6% lower, whereas Nikkei and Kospi are trading on the higher territory. If you are looking out for cues from the SGX Nifty, Nifty is also indicating a higher opening for the index. Yesterday, Nifty closing was around 8,320 levels, so 100 points higher opening is expected as the Nifty index. The higher opening is sustained and follow buying happens during the trading session. It's a very positive sign for the bulls, and the follow buying happens in such a way that if it occurs, then a very positive sign for our model portfolio and most of the stocks in the market. And on the downside for Nifty, as mentioned previously, 21 DMA is a very crucial index to watch for the next couple of sessions. If that level is held, then we might see consolidation or Nifty advancing higher. But if that level is breached, we might see further selling happening in the market. For the chart of video, we picked ICICI Bank. There is no need to introduce about the banking. It's a major leading, one of the leading company in the private banking space. The stock has been forming a large cup-based pattern, and there is some supply zone around 850 level. That is a pivot level. Previously also 940 acted as a resistance, and now 950 is acting as a resistance. The couple of sessions back, the stock tried to break out, but it didn't find the required momentum to break out. There has been some resistance at this pivot level, and the volume is also on the lower side. On the breakout to happen, we should like to see higher volume also, so that the momentum will come in and some 10 to 20% up move might be expected. Ratings wise, the stock is very strong company. There is no doubt about it. The EPS of 97 indicates a very strong, fundamentally a very strong company. Technical ratings have slightly beaten down because of slight underperformance of the stock. You can see the stock moved sideways or consolidated. So that is the reason RS line has also moved sideways and RS rating has come down to 62. But these numbers will improve as breakout happens and the volume comes into the stock. Number of funds, the stock has a very good sponsorship. There is no doubt about it. As we all know, it's a very favored stock among the institutional investors. More than 2,000 funds have invested into the stock. So these funds will definitely give support to the stock when there is a turbulence or selling pressure in the market. So overall, this stock has been in the buy watch list as well. If the breakout happens, we might consider looking at the overall market condition and Nifty Bank condition especially. If you have this stock in your portfolio, you can continue to hold it. 21 DMA is tested at the current moment, and depending on your buy price, you can keep the stop loss level so that your capital is not at risk.